So you're saying you're still going to look for these exciting new things, but you're going to do it on your own time frame. You're going to hold them as long as you have to hold them to realize whatever you'd like to realize, and not beholden to anybody else who's pushing you to do that.
In fact, and the learning on this was one that has frankly cost me billions of dollars personally. There was opportunities for us to invest in Uber all the way into the Series, B, I remember, when Menlo called and Benchmark and, on a Sunday night, just put in $10 million, and which would have turned out to be a multi-billion-dollar piece. And I said no, because I didn't understand how an investment like that could sit inside of a very traditional venture portfolio. That was my mistake. I've made similar mistakes like that in the past. One of our biggest investments is a company called Slack. And I still think to myself, why did we not just lead every single round and write the entirety of the fund into that company? It was obvious from day one that Stuart Butterfield is an iconic CEO and that Slack is going to be one of the most important tech companies in the world. The reason I didn't do it, Scott, was because I was running a fund. And I had employees, and I needed to generate fees, and these funds had LPs. All these mechanics and guardrails that were not necessarily coupled with making the most amount of money. It was coupled with the business model of being in the investment life cycle. And having the freedom now to step away from it, I took it. And I think it's an incredibly exciting time for me personally, although it can be very jarring and upsetting for those investors who now have to go and find other places, probably not as good, to allocate their money.